Remember when everyone was talking about Pi Network? The app that promised you could mine crypto on your phone without draining your battery, all without needing expensive hardware? For millions, it felt like a dream come true. But now, that dream might be turning into a nightmare. Prices are falling fast. Millions of tokens are about to be unlocked. And behind the scenes, holders are quietly moving their coins to exchanges in massive numbers. The hype has died down, and something much more serious could be on the horizon. In this video, we're going to break down exactly what's happening with Pi Network, from on-chain data to token economics, and why the warning signs are too big to ignore. If you're holding Pi tokens, thinking of investing, or even just following the project for curiosity, stick around. Because by the end of this video, you'll have the full picture of whether Pi is heading for a comeback or a crash. As of Tuesday, Pi Network's token dropped sharply to around $0. 75.70, that's a 13% decline just from last week, and more than 54% off its highs in May. And for context, we're talking about a project that, not long ago, was valued at over $1.60 per token. So what happened? Why the sudden drop? The first piece of the puzzle lies in exchange flows. On-chain data is showing a significant increase in Pi tokens being moved onto centralized exchanges. In the past 24 hours alone, over 3.075 million Pi coins have been transferred, a strong indicator that many holders are preparing to sell. These are not small moves, and they're not random. They're coordinated and telling. OKX alone received 1.474 million coins. BitGet saw nearly 21,000 tokens. MEXC had more than 460,000 tokens transferred to its platform. And Gate.io saw a massive 1.1 million coins flow in. This sudden spike in exchange inflows usually signals one thing: capitulation. When investors give up on their positions, take the loss, and sell. That's usually a red flag for even further price drops. Now, let's look at the bigger issue: supply. Even if you're bullish on Pi's long-term vision, you can't ignore the impact of token unlocks. And Pi Network is unlocking tokens at a staggering rate. According to the data, over 263 million coins will be unlocked in June. Then in July, another 233 million. And in August, the unlocked total is projected to be 132 million coins. But it doesn't stop there. In the next 12 months, the network is expected to release approximately 1.519 billion tokens, that averages out to 132 million new tokens hitting the market every single month. This isn't just a supply-side issue. It's an economic pressure cooker. Think about it: what happens when supply increases dramatically, but demand doesn't follow? Prices drop. Every time tokens are unlocked and dumped onto the market, they dilute the value of the existing ones, especially when buyers aren't stepping in to meet the volume. And unfortunately for Pi Network, buyer interest seems to be evaporating. Social metrics, one of the most telling indicators of retail engagement, are showing a steep decline. According to Sentiment, Pi Network's social dominance score, which measures the share of attention it gets across major platforms, has dropped from 1.15% in April to just 0.24% now. That's a staggering decrease. But it doesn't end there. Social volume, which tracks how many people are actively talking about the token, has fallen from a year-to-date high of 182 to just 20. That's an 89% drop in online buzz. And let's be real, in crypto, buzz is often half the battle. When people stop talking about your project, they stop buying, stop supporting, and eventually stop caring. The silence becomes deafening. And for a community-driven token like Pi, that's a major problem. Looking at the charts, things don't look much better. Since May 12, when Pi coin hit a high of $1.6677, it's been in a steady downtrend. It's now trading around the $0.75 mark, and more importantly, it has fallen below its 25-period exponential moving average, a key technical indicator for momentum. When price drops below this level, it typically signals that the bears are in control. Another worrying sign is the percentage price oscillator, or PPO, which has now moved below the zero line. That's a strong bearish signal, showing that the momentum of the decline is not only present but gaining strength. Even more concerning is the pattern forming on the charts, what analysts call a bearish flag. This formation is often a precursor to further downward movement. If the flag plays out and the price breaks down from its current support zone, the first key level to watch is 63 cents, which aligns with an ascending trend line that connects several recent swing lows going back to early April. But if that 63 cents level doesn't hold, the next critical support is all the way down at 40 cents. And remember, $0. 40 was the lowest point Pi has seen this year, back on April 5th. Falling back to that level would represent nearly a 50% drop from current prices. That's not a dip, that's a collapse. Now, let's take a step back and ask, is there any hope for Pi Network? The answer isn't black and white. On one hand, Pi has a massive user base, millions of people downloaded the app and mined the token over the last few years. That kind of grassroots network is hard to replicate. If the team can roll out a functional mainnet, introduce real utility, and onboard new developers or partners, there could be a path to recovery. But those are all big ifs. So far, there's limited clarity about when Pi will be fully tradable on major exchanges. Most of the trading we're seeing now is in the form of IOUs, not real, freely tradable Pi. That alone limits liquidity and creates uncertainty. And without clear communication from the team, even longtime supporters are beginning to lose patience. There's also the problem of perception. When a token crashes over 80% from its all-time high, it damages trust. When people lose money, they remember. And rebuilding that confidence isn't as easy as flipping a switch. It takes transparency, results, and momentum, and right now, Pi doesn't have much of any. Still, the story isn't over yet. Crypto is full of surprises. Tokens have crashed before and made legendary comebacks, just look at what happened with Solana or Dogecoin. The difference, though, is that those projects had strong developer ecosystems and powerful narratives pushing them forward. For Pi, the next few months are critical. If exchange listings become real, if adoption begins, and if the team steps up its engagement, we could see a turnaround. But if current trends continue, increasing supply, shrinking demand, and fading interest, then a drop to 40 cents might just be the beginning. So what's the takeaway here? If you're holding Pi, this isn't a time for blind optimism or panic. It's a time for clear-eyed analysis. Watch the charts. Monitor the token unlocks. And stay on top of how the community and developers respond. Because in crypto, momentum is everything, and once it's gone, it's incredibly hard to get back. Let us know in the comments, are you still holding Pi? Are you selling? Or are you waiting for a miracle? Either way, hit that like button if you found this video helpful, subscribe for more in-depth breakdowns, and tap that notification bell so you don't miss what's coming next. Stay safe, stay sharp, and as always, keep your strategy smarter than your emotions. See you in the next one.